All right. And so this is the last part of this video, and it might be kind of long. So if all you were looking for was the technical indicators for the week, you can sign off here and check us out tomorrow. If you don't have an exit strategy in mind, or you're thinking about, how do I get out of this position when the time comes? This is kind of just my little talk through and how to help. I'm not sure if I'm going to be streaming if there is a short squeeze. And in that event, I would like to just kind of give you guys an idea of what I'm going to be looking at when the short squeeze happens. So first things first, I'm a day trader, and normally this is how my day trades go. I buy low, wait for a profit that is within my parameters, and then I sell. I don't follow the stock beyond that point. I usually don't know that much about the stock when I buy into it. It's a very short-term kind of thing. I take my profits and I leave. I have a specific risk level. If the stock runs up $100 after this point, that's not something I care about. I've taken the money that I intended to make. But this is difficult when you talk about GME, because GME positions aren't a day trade. They're not even really like a long-term investment trade where you're kind of slowly waiting for the underlying to accrue value, and that in turn accrues value in your portfolio. We're waiting on a very specific event with GME, and it makes it difficult to discuss exit strategies and options because essentially everyone in this stock is invested as a YOLO. We are maximizing our risk for maximum potential gains and kind of betting on a massive black swan event. My position included is very similar to that. And the mentality behind that is that we expect price targets far beyond any potential capped profits. And when people first started talking about this back in January, they were discussing, hopefully it could reach like 1,000 a share and then we can plan exit strategies from there. And since then, partially just on pure speculation and excitement, and also partially on information that's come to light on the short positions and the effect GME is having on our financial markets at large, we've seen that number increase. Rightfully so in some cases, maybe to extremes, maybe not. But we've seen it go from 10,000 to 100,000 to 10 million. And more recently, I've been hearing 100 million a share. And I like these numbers a lot, but in the reality of the situation is we really have no idea where this is going to end up. And I know that sounds like FUD, but it's not. I mean, the stock could hit 9.9 million, or it could hit 69,420,000, right? The point I'm making is not that there's a limit to the price. The point that I'm making is that this has never happened before, and we have no idea how it's going to play out. And so this week, between streaming and live charting, my number one most asked question has been, what's my exit strategy? And I tried to think of a way to help all my viewers and then also the people on Reddit, no matter how complicated this seems to them, with just like the pure basic information that I'm looking at going in to the short squeeze in the event that it begins to occur. And the big questions I had to ask myself when designing this was, how do you discuss an exit strategy with no known price targets? And then also, how do I make it simple enough for everyone to understand? And here's my best bet at trying to fulfill that for everybody. So the first thing I wanted to do is I wanted to define the points of a squeeze. And so in my opinion, we're going to have three major parts. We're going to have the ascent, we're going to have the peaks, and we're going to have a correction. And let's break those down. So the first part of the ascent is going to be upwards price movement, very similar to the action we're seeing now. If I had to say we are in a specific place on the squeeze, I would say this is where it is. It will see slow price movement into testing a resistance level, and then more slow price movement upward, and then another resistance level, and more movement upward as it breaks through that resistance level. This can take weeks, months, or minutes. I don't know how long this phase will last because I don't know a set date that the squeeze will happen. I can use technical indicators to assume days of potential breakout or higher volume or higher implied volatility. But in reality, there's no way to tell. We could be doing this for a while. As we've seen in the past, sometimes this phase happens very, very quickly. And this phase begins to bleed into what I think is the next phase of the ascent, part 2, which I call FOMO. This is the point at which the faster and faster breaks in upper resistance begin to draw interest from the market at large, from other retail investors, from news media. And this is when small buyers and large buyers will start to rush in to capitalize on this rapid upward price movement. This is just the beginning. We're still in the very beginning phases when this begins to happen of the short squeeze. This period, I think, is going to be marked by exponentially larger candles as we move up, into halts as the price increases begin to become greater over individual short periods of time. And I want to warn for this part that this is really where the psychology of fear comes into play on a short squeeze, and that you will see massive run-ups to a halt, and after that halt you may see drop-offs in excess of that run-off. So your drop-off may go lower than the initial price, the initial candle where the price was halted. And what happens here is you have a lot of people that are paper-handed, day traders, and institutions are cannibalizing each other for small profits. But you want to just stay calm through this period and wait. Breathe, take your time, don't react strongly. And it's going to be hard because the price movement and the volatility could be extreme. This will be the real first test of those diamond hands that everyone's saying they have. After that period, we're gonna bleed into another period, and it's gonna happen pretty quick. The transition's not gonna be very obvious immediately, but it's going to be very obvious within a couple minutes that we're moving into this next phase, and this is the margin call. So when we hit a price target, and I don't know what it is because I'm not short this stock, I don't know what their margin call positions are for the people that are short. I do know that it's most likely above $483. Smaller positions could start to be margin called, short positions could start to be margin called before that price, and some may be margin called after. I just know that that's a good median for where a margin call could occur, because that's the peak that we hit in January, where we know for a fact that no margin call occurred. Whatever the price is, that's irrelevant. This is the moment where shorts must concede their positions. Whoever lent them the shares and whoever is lending them the margin that they're trading on is calling that back and saying that you need to get out of this position immediately. So what will happen is, behind the scenes a lot, but I don't think that's something we need to worry about as far as this this due diligence goes. We will start to see large green candles with high volume moving up at a rapid pace. So what we expect to see here is an even more drastic increase in volume above the FOMO stage. I'm talking single candles with massive upwards price movement and halts, and maybe halts more often than we are trading. I actually expect the pattern to kind of play out like unhalt, rapid rise, halt. And so there may be far more time halted than actually trading the stock. And this is good because there's not a lot here to do. There's not a lot of fear creation, as almost all of the price movement from this point forward until we reach the peak is going to be upwards. Even if there is some red after one of these long halted repeatedly green candles, it will be minimal and will immediately be swallowed up by the massive amount of buy pressure moving the stock up. So psychologically, this should be a pretty simple phase. We'll have a lot of time to sit and think because of all the non-stop halts that will be occurring. And this is how you're going to know that we're squeezing, definitely. And there will be a peak in the future. This could go on for days. With the number of halts, depending on what the upper ceiling of the stock ends up being, yeah, this could go on for quite a while. 1 day, 2, maybe more. And I expect it to look something like this. We're going to move from that lower volume, rapid uptick and halting to these large, massive upticks with maybe this little bit of like selling pressure here after a halt, but it won't be relevant as the price will immediately continue to jump upwards. And then the next phase, which is the peak. As in everything great, some things must come to an end, and this is one of them. So how do we identify the peak? That's going to be the first thing that I want to cover. And how we're going to identify it is we're going to see decreasing volume in those large up candles. We're going to see less frequent halting, more frequent price action. And we're going to start to see those green candles peak and lead into red candles, maybe small red candles before we see another peak, maybe more volume in those red candles. And this will be people attempting to time the peak, getting out of positions. People are going to start selling at a certain point, and we're going to see some downward trend. Some actual downward trend, maybe a few candles, maybe more. And the sell volume is going to increase as the downtrend continues. And then what we're looking for is a bounce up to a lower high. And so if our first high was here, our next high is down here, and then we're going to see some more sell volume. And then even lower volume on these up candles into another red candle here. And this is going to form a triangle, a wedge. And these wedges tend to break down, but they can also break up. And so we're going to be looking for these to form on the way up to the peak, at the peak, and after the peak. And these all present down here at this lower end opportunities for exit. Now, not an opportunity to exit your whole position, and I'll go into why soon, but an opportunity to exit nonetheless. And that these are the safest place on this last down candle to exit a part of your position. And what do I mean by that? Well, you want to exit on that down tick because that ensures that the stock is not going to continue to climb on these green arrows. You've already confirmed that you have lower highs and lower lows. And so you can see that a downtrend, an actual trend, is beginning to occur with the price of the stock. And you don't want to sell until you can confirm some sort of trend. And several of these patterns can form. And so say we exit here. If we were to exit 100% of our position here, and the stock immediately breaks out of that triangle to the upside, you would have lost all the potential money in this price range. And so what you want to do is, if you are beginning to exit on these wedges, is you want to exit your position very slowly as you confirm that you have not reached the peak yet. So it's almost like a false signal, and you want to be aware of it as you exit. So if you exit 100% of your position here, you lose all the money in this and this wedge. So whoever waits and sells here at these higher wedges is going to be far more profitable in exiting their position than somebody who sells down here on exit 1. But if you exit 10% of a position here, 40% of a position here, and 50% of the position here, you are far more profitable because 70% of your position has been exited, or 90% of your position has been exited at a much higher price than the first 10%. I expect these to form up to the peak, and as you can see, these wedges are all marked by that same lower high and lower low trend. And eventually, towards the end of this, some of these will start to break down, and they'll break down rapidly. And this is the point at which you can expect the price of the stock to begin to plummet. How fast it'll plummet, no one can say. It may continue to form wedges and wedges and wedges on the way down. It may drop like a brick. There's really no way to say. I've looked at a few short squeezes in the past, and they've played out differently. Some drop very fast. Some take some time. With the amount of shorts GME possibly has floating around, it could take a very long time for the peak to unravel, but it may be fast. We do not know how overshorted the stock is, simply that it is overshorted synthetically. And then that last big drop off, when we start to see massive price decreases from the initial from that initial peak, then we can assume that we are moving into the last step of this, which is the correction. As those price drops pick up steam, they'll start to halt on the way down. Once these sell-offs are confirmed, you probably want to be out of all your positions. Unless you're like me, you're going to be holding GME stock for a very long time. But this means that the stock is going to be correcting back to its market value levels, and hopefully from this point on into the future, identifying a correct valuation for GME stock. This could be the last dip buy in GME history, as I believe this company has a bright and profitable future, and I will be buying in more at this point. That's not to advise you what to do with your money. I'm just letting you know what I'm going to do. As always, this is not financial advice. I'm just giving you my rundown of things and my opinion. What you do with your money and with your exit strategy is up to you. I just hope I'm able to shed some light on what I'm looking into and how I'll be planning my exits. Thank you again. Your support, as always, is appreciated. If you want to read more on this, you can check out the DD on Reddit. You can follow me on Twitter. Or check out our Discord, where we also do a live audio stream from our live streaming. And if you guys want to help support the channel, there's a coffee link down below, and that's always appreciated as well. If you like this video, please drop a like and subscribe if you want to see more of this. Thank you so much, and you guys have a great week.